ticker symbol VIRI, got the retracement that we were looking for almost directly on the penny that we kind of put out there, right? Let's go ahead and go over the potentials for the upside continuation for this asset. What is up, you guys? Thank you so much for stopping by. Once again, this is ARCa coming at you with a VIRI technicals, raw price action, and statistical threat of analysis on this Thursday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, you guys. So yeah, we do have. We were talking about the retracement here to that $1.54 zone where the 1.618 was located. Right. This is why I had these arrows pointed, and this is why I had that area there. The higher likelihood, of course. We talked about that 1.618, right? So if we can just take a look at the low, all you have to do is take a look at the L from the OHLC up here, right? So L for low. You hover over the candle and that gives you the target, right? So 153 was that retracement that we got in a huge bounce from it, right? What we want to see here is if it was the low before a continuation to the upside. We're going to validate that. What I do like so far is that we are still seeing critical expansion, right? Meaning that there is still high volatility in this, and we still have an upside bias on the stochastic momentum oscillator, right? From both the EMA 3 and the SMA 14 moving averages within the stochastic momentum indicator. Okay, so those are all very good signs. Okay, so now I understand that I do have the 187 here as the top side before we can retrace. That had a lot of confluence with the 188 of the 2.272, but please remember that the 5-day volatility versus momentum backtest, which was backed by DMI and also had a silly 100% accuracy, please notice here that the target that we were essentially looking for was 183. Right, as soon as we highlight this, and we have to highlight it just like this, right? So we were looking for that 183 top, and now if we go on to this chart over here and you look at the very top side of this, these are 12-hour candles, right? So this is from today. Look at the top side here. Look at the H on this, okay? So the H on there says 184. Right, so within a cent of each target we came in, right? So, but remember that the overall range was between the area of about 183 to about, the area of about 154 to about 187 or 188. Right, we were even talking about the 191 here, right, and even the 188 of the 3.618. Also, that had a lot to do with the 187 right over here, which is we were talking about this even from down here, right? The likelihood of facing the resistance from the Gaussian channel on the 5-day period. Right, so now let me just go and take a look at the 3-day time frame as nice. Okay, the bottom side of that 153 that we faced today is the fact that we actually have now broken out of the Gaussian channel. Okay, so this is leading to something very interesting. Okay, I just had to reset the indicator. Sorry. So now I need you to focus on a couple things here. Okay, I need you to focus on the fact that yes, we got the downside and we touched our supports that we were looking at from discretionary targets, right? But if you're looking at the statistical indicator, the Gaussian channel is suggesting a bottom side of about 150, not 153, right? So there is still a chance that we can actually make a retracement back to the area of about 150. And why can I say that? Okay, so there is something that a very talented trader talks about, right? And they're called zones of imbalances. Okay, so I want to point this out to you right now. Okay, so because I do see a very clear imbalance. Okay, the imbalance happens when you have the green candle suggesting the continuation to the upside. That wick high marks a very specific range, which would be in this case about 148, right? So on that 148 target, now following the next candle closure, okay, we're looking at dailies here, and oftentimes this is something that what I'm saying here actually works on the 2-minute time frame, 3-minute time frame, right? So now look at the bottom side of this candle. So now you can see that this wick here that came down to 153, there is a gap between this wick and this wick, right? So that creates an imbalance, right? So this imbalance here gives us a range to find, and that could be a zone for loading, for upside, right? So now we can see that we have an inner range within our support range located between 148 and 153. Check it out. 148 is that target from the imbalance, while the 3-day Gaussian channel is suggesting that 150. Right? So it's very curious that we would get that, right? So now let's go ahead and see if we can validate this potential short-term downside, right? So actually, let me see a couple things here. I want to load up my averages because I'm noticing a couple of things, but I just want to make sure that I cover all the bases, right? As it's incredibly important that we do so. All right, so let me take a look at a couple different metrics here, because I would really like to see if we have something of confluence. The SMA 10 is located at about 154, still within that same realm, right? So let me just take a quick look at the 8-hour, and this let's see, the 8-hour is suggesting that 153 as well. Okay, so it's still from the top side of our, oh, there we go. Okay, check this out. The 55 EMA, or I think actually it's the 50. Let me see where I have it set to currently, right? So it is set to the 20. Sorry, the EMA 20. I don't know why I have these like this. I need to color them the other way. Right, there we go. That makes more sense. Okay, so yeah, the EMA 20. I mean, look at where it's landing. Let me just highlight it like this, and that can actually it doesn't tell you, right? So yeah, look to the right. It's actually the area of about 149. So the 6-hour time frame looks like where we can find that support, right? So I mean, we have several things, right? And I usually use the EMA 20 or the 21 and the EMA 50 or the 55. Right, so it's very curious that it's right on that target. And also notice that there is, if I just get rid of, you know what, I can do it just like this. I just want you to see how often the balance between the SMA 10 and the EMA 20 are being used. Right, so we have all kinds of support touches from both of these moving averages. Right, so